India's tryst with Russian crude oil may be over soon. The Ural crude has breached the $60 per barrel cap. Western pressure has also led to uninsured shipping of the commodity to India, coupled with obstructions in payment. Then, there is news of Moscow cutting down oil exports from its western ports. For now, India may continue with Russian crude oil even above the price cap, ignoring Washington's fresh warning to transgressors of its sanctions. India's position emphasizes its pressing need for fuel amid the surprise output cut by OPEC+. Russian crude oil had a price cap for trading set at $60 per barrel by the G7 nations along with the European Union and Australia. Recent data shows that the trade price has breached the cap and is likely to invite scrutiny from the West. The UAE has recently said that payments to Russian accounts in Dubai cannot be made in dirhams to buy oil above the price cap. This was because of increased pressure from the West. USA's Office of Foreign Assets Control said transporters and financial institutions must retain records and attestations by oil marketers that Russian oil was bought below the cap to avoid penalties. Penalties include denial of tanker insurance, among many others. So, do these developments signal an end for Russia-India discounted oil trade? Some experts say that the trade may continue.
It is the sweeter crudes such as the ESPO, etc., which are at higher prices. Even though we may have breached for certain crudes, we are still going ahead with those purchases through alternate settlement mechanisms. These were through the dirham route only that these payments were being made. But in case that is disallowed, we can settle these payments through some of the payments that we get for the sale of crude, our stakes in some of the oil fields in Russia, where instead of the money flowing to India, some of the payment can be made through those payments.
It's unlikely that it will come to an end because India has time and again stated that so far as energy security of the country is concerned, it will like to pursue an independent policy. In terms of actual practice, we will see that to the extent possible, India will continue to contract the Russian oil.
Till FY22, OPEC's dependence on India's oil imports was 72%. In FY23, it fell to 59%. At the same time, India's dependence on Russian crude oil increased significantly. Russia has the largest share of India's crude oil imports for its affordable price. Saudi Arabia and Iran, which have historically remained the top two exporters to India, have fallen to second and third. India's daily crude oil demand has also increased over the years. It was 4.5 million barrels per day in 2020 and rose to around 5.4 million barrels per day in 2023. Presently, Russian crude oil accounts for 44% of India's domestic crude oil demand. Although Russian oil is not a part of India's crude basket, it may still have an impact on inflation because of its significant share in India's crude oil demand. What do experts have to say about it?
As of now, even though I know that OPEC has announced a cut in the oil production, so that had some impact on the global crude prices. But in general, it is expected that the crude oil prices are unlikely to go back to the level which was seen immediately after the Russia-Ukraine war. India's import from Russia from almost a negligible quantum to now almost close to about 30%. Means that we will be able to cap the imported component of inflation to a large extent.
With the Ukraine crisis far from over, sanctions on Russia by the West are likely to continue. This may impact India's oil imports. After all, India is the world's third largest oil importer. So, what is the prospect of India's crude oil imports in the near term?
I mean, our overall dependence on crude imports will increase. We project that by 2030, the demand will be about 330 million tons. Having said that, how long these discounts remains to be seen. That is because more and more countries are now buying Russian crude. And over time, as the market grows for the discount may disappear. And in case this trend continues, then over some time, these imports the discounts may reduce, and in which case India may look at other options as well.
The challenges in importing relatively cheaper crude oil from Russia have only increased. However, India will still have options that it can use to continue importing Russian crude and make payments. Experts believe that there will not be much of an impact on inflation. But how exactly things will pan out depends on the geopolitical scenario and is something to keep an eye out for.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.